Today I'm going to tell you about the nature of wealth, foolishness, and the art of living. The genetic code of temperament. Having lived on this earth long enough and raised 8 children, I have come to a conclusion that makes most modern child psychologists squirm nervously in their chairs. It is an uncomfortable conclusion, not a popular one, but an absolutely unavoidable one. Nature beats nurture every time, and by a landslide. You can spend your whole life trying to instill virtue, patience, thrift, and self-discipline in a child. You can lecture them, set examples, build systems of rewards and punishments. But if the proper module is not in their neural wiring, you may as well try explaining delayed gratification to a cat. The cat will stare at you, blink, and think only about how to steal the fish right now. Some people are born with an innate capacity for prudence. Others come into the world with, figuratively speaking, a hole in their pocket. And that fundamental difference has far less to do with the quality of education or the prestige of their diplomas than with inborn temperament. I have watched this drama my whole life. Picture the scene. You meet a woman who is 95 years old. She's wearing a coat probably older than most current hedge fund managers. The fabric is worn thin. The style went out of fashion back in the Eisenhower years. She lives in the same house she bought half a century ago. She still clips coupons from newspapers to save 50 cents on cereal and buys groceries only when they are on sale. Yet all the while, quietly and without fanfare, she sits on 4,000 Class A shares of Berkshire Hathaway. If you take out a calculator and mark that to market, you will discover that this modest old woman is worth more than $2 billion. She did not need courses in financial literacy. She did not need motivational speakers. She came into this world with discipline as a pre-installed operating system. She understood the essence of compound interest, not through formulas, but through instinct. And now look at her grandchildren, the second or third generation. They wander through life draped in diamond watches, driving vintage collector cars, sincerely convinced they are incredibly smart because they can afford antique jewelry. But the truth is that they are not smart. They are simply parasitizing the prudence of a person who has long been dead. That is the great irony, and if you like, the black humor of capitalism. The market rewards good genes with the same generosity with which it rewards good judgment. And it punishes both with the same cruelty when those resources fall into the hands of idiots. People love to comfort themselves with the illusion that they can train themselves into rationality. They swallow a couple of Benjamin Graham books, listen to popular podcasts about the millionaire mindset, and begin to imagine they are the next reincarnation of Warren Buffett. That is not how it works. Rationality is not a seminar you can attend on a weekend and walk away from with a certificate. Rationality is a habit burned into the subcortex. It is painful daily work on yourself. You do not learn it once. You must become it. You have to rebuild your personality. That is why most people fail. They can recite the definition of compound interest from memory, draw the graph of exponential growth, but the moment they see a lottery ticket with $100 million jackpot, their brain switches off. They can write a dissertation on opportunity cost, yet cannot stop themselves from buying a new iPhone on launch day, even though the old one works perfectly. Human nature, with its ancient instincts, always defeats logic in the short run. And the problem is that most people live entirely in the short run. When people ask me, Charlie, what is the main secret of wealth? I usually answer briefly, don't be stupid. But the full truth is much more uncomfortable. Most people cannot help being stupid. They are biologically programmed for immediate gratification. The very idea of waiting 10 years for a reward gives them a physical itch, almost an allergic reaction. And Wall Street knows this perfectly well. The entire financial industry is built on exploiting that itch. They sell action. They package the thrill of excitement in the wrapping of investment opportunity. Meanwhile, that old lady in the worn coat continues to sit quietly in the corner, allowing her assets to grow. She is boring. No one is going to make an exciting movie about her. But she wins. You cannot teach that temperament. You can only recognize it and try to protect it from outside noise. That is exactly what Warren and I built Berkshire Hathaway around. We designed that company as a refuge for people who think long-term by nature, not by instruction. Our shareholders are not people jumping from position to position. They are people who would rather watch paint dry than chase the next bubble. And it turns out that this capacity for boredom is a colossal competitive advantage. When the crowd is consumed by emotion, patience becomes a form of arbitrage. You buy time that others are selling for nothing. The pathology of delayed living. But let us not romanticize this idea too much. Delayed gratification has its own form of stupidity. The pendulum can swing too far in the other direction. Some people embrace the idea of saving so aggressively that they forget to live at all. They hoard joy the way misers hoard copper coins, always waiting for a better time to spend it. I call this condition financial anorexia. It is no longer prudence. It is pathology, a mental disorder. Once I said to a man, if you save every cent and die with a huge fortune but no memories, you simply sacrificed your life to the god of compound interest. You cannot capitalize time. Time cannot be put on deposit to earn interest. You can either waste it foolishly or use it wisely. So yes, I believe in saving, but I absolutely do not believe in self-denial. My personal formula was simple. I spent 2 or 3 cents out of every dollar I earned and saved the rest. That ratio worked for me because I never needed much to feel content. The real trick is not how much you earn or how much you save. It is how little you need in order to be happy. When your expectations are reasonable, the whole world feels affordable. But here, nature enters the game again. Even if I tell you all this, half the audience still will not do it. Some people simply cannot physically tolerate inactivity. They would rather feel busy losing money than feel lazy making it. That is human nature. Evolution prepared us to hunt, to run after mammoths, not to sit in ambush for years. Sitting on cash or waiting 10 years for an investment idea to pay off feels to most people like a small death. They crave movement, even if that movement is financially killing them. That is exactly why markets never lack noise. Every era produces its new distraction. .coms, cryptocurrencies, meme stocks, NFTs. It does not matter what flavor this week's mania takes. Technology changes, the scenery changes, but the psychology stays the same, just as it was in the Stone Age. You can replace roulette tables with high-frequency algorithms, but the impulse behind both is identical. It is the need for stimulation, the desire for something to be happening. That is why patience will always remain a rare commodity. It is not taught in schools. It is probably inherited. People love to argue about nature and nurture as though one cancels out the other. But the truth, harsh and uncompromising, is that nurture works only when nature allows it. If you are born impulsive, you can certainly work on yourself and improve, but you will always be fighting gravity, and gravity usually wins. The best investors I know are not necessarily the smartest in the academic sense. They do not solve differential equations in their heads, but they are the calmest. They possess a temperament that does not require constant external confirmation that they are right. They are willing to look like idiots in the eyes of society for a decade, if that is what it takes to be right in the end. And they usually are right, because the market punishes impatience far more harshly than ignorance. So what is the lesson here? If you are naturally impatient, at least have the courage to admit it. Recognize your diagnosis. Design your life around that flaw. Automate your savings so that your emotions cannot get at them. Avoid speculation like the plague, and stop pretending that by Monday you will transform into Ben Graham. If, on the other hand, you are naturally prudent, guard that temperament like gold, because the whole world will try to talk you out of it. Every advertisement, every headline, every influencer on social media is designed to make you feel that you are falling behind. Do not fall for it. Remember that old lady with 4,000 shares. She did not chase trends. She did not need applause. She simply sat quietly, allowing arithmetic to do all the heavy lifting. And arithmetic, unlike emotion, never lies. The illusion of tomorrow and the inflation of life. The patient minority will always look foolish at the beginning, but when the noise dies down and the charts collapse, they are the ones still standing. Everyone else will go prowling for the next sure thing, and of course, they will find one. There is always something new waiting around the corner, expensive enough to teach the same lesson all over again. People love to preach the gospel of delayed gratification. Save now, enjoy later. It sounds noble, disciplined, almost holy. But if you look closely, you will notice that most preachers of this idea do not actually know what the word later means. Later becomes someday. Someday becomes never. And before you know it, the one who was saving leaves this world, and the process of compounding stops. Not because the math failed, but because biology did. I am not saying patience is bad. It is a cornerstone of investing. But like every good idea, it can be carried to absurdity by people who do not understand it. Patience is not waiting forever. It is waiting with intelligence. There is an enormous difference between delayed gratification and a delayed life. I have seen people postpone everything, vacations, hobbies, even simple pleasures, because they were obsessed with maximizing future comfort. They would not spend even 10 cents today if they thought it would turn into 20 tomorrow. And yet, when that tomorrow arrived, they were already too old to bend down and pick up those coins. I call this the cult of delayed reward. They worship compounding but forget mortality. They optimize spreadsheets while ignoring sunsets. Warren once joked about this better than anyone. He said, "If you buy 30-year government bonds yielding 3% while inflation is 2%, then after taxes, you will be lucky to break even." In other words, you delay gratification for 3 decades just to end up riding the same number of attractions at Disneyland. the same roller coasters, the same overpriced snacks. You simply postponed it for 30 years and convinced yourself that this was wisdom. That is not delayed gratification. That is self-deception, wrapped in thrift. When I was younger, I often told my children, "Eat hamburgers now so you can eat steaks later." At the time, that made sense. Money grew faster than inflation. But today, I would tell them something different, because what if the steak never comes? What if the economy changes, your health fails, or the government invents a new way to tax your patience? Then you discover that saving without a purpose is not prudence. It is simply delayed disappointment. The truth is that delayed gratification works only in systems that reward it. In a world of low interest rates and high real inflation, it becomes a trap. You are not saving for the future. You are subsidizing someone else's leverage. Look at banks. They take your money, pay you pennies, and then lend it out at 10 times the rate. You call that saving. They call it free inventory. Guess who gets the better deal? I am not suggesting that you burn your money. That is stupidity in the opposite direction. But somewhere between reckless spending and manic hoarding lies sanity. And that is precisely what most people never find. You should save in order to buy freedom, not furniture. And you should delay gratification only when the reward truly outweighs the burden of waiting. Let us talk about inflation. People do not understand it. They think it is some abstract concept economists argue about on television. In reality, it is a slow theft of purchasing power. Invisible, polite, and ruthless. If you save money at 3% annually while inflation runs at 2%, your real return is practically zero. But the tax collector still takes his cut from that nominal 3%. So after taxes, you are losing ground. You delayed gratification and were quietly robbed for your effort. That is why I have always believed in rational delay, not moral delay. Saving is not a virtue if it earns nothing. There is nothing virtuous about holding cash in a system that punishes savers. That is simply naivete. If you are going to delay gratification, do it for something that grows in real terms, not merely in numbers on a screen. Invest in productive assets, not promises. Buy businesses, not bonds that guarantee poverty. That is the only way to preserve both your money and your sanity. Happiness as a utilitarian function. The human mind has a strange tendency toward purism. We think that if something is good, then more of it must be even better. A little patience is good. Therefore, infinite patience must be divine. That is how you end up with people who refuse to enjoy life until their portfolio reaches some arbitrary number. 5 million. 10. Whatever goal they choose in order to feel safe. The problem is that the moment they get there, they simply move the goalposts. They are addicted to the word someday. And someday is the most dangerous word in the language of money, because it steals today in small portions, quietly, rationally, almost elegantly. When I talk about a rational life, people sometimes assume I mean a joyless life. That is false. I enjoy good food, intelligent conversation, and a quiet day as much as anyone. But I enjoy them within reason. I do not postpone pleasure to the point of absurdity. I do not pretend I have an infinite number of tomorrows, because I have buried enough friends to know that the number of tomorrows is finite. The goal is not to die rich. The goal is to live wisely, which often means knowing when enough is truly enough. One of the funniest paradoxes of human behavior is that people think happiness is somewhere in the future, waiting for their arrival. But happiness is more like interest on a deposit. It accumulates only when you reinvest it regularly. If you postpone it indefinitely, it burns away. So yes, save for the future, but also buy the damned ice cream. Take the children to the movies. Sit quietly with your spouse instead of reading yet another financial forecast. That is not indulgence. That is maintenance. You are preserving something more valuable than money: perspective. When people speak about delayed reward, remember this. It is not a moral commandment carved on tablets. It is a tool. Useful in moderate doses, deadly in excess. The right kind of delay builds freedom. The wrong kind builds regret. And most people cannot tell the difference until it is too late. If you save money only in order to die with it, you did not understand the assignment. If you spend money only to impress others, you failed it completely. But if you can delay gratification long enough to make compound interest work while still living a meaningful life, then you have hacked the system. In my youth, I knew a man who bragged that he brewed one tea bag 3 times. 3 times. He spoke of it proudly, as though he had discovered the philosopher's stone. That man wasn't wealthy. He was trapped. He had turned thrift into theater and deprivation into identity. If you need an Excel spreadsheet to justify buying an ice cream cone, you are not frugal. You are neurotic. People forget that thrift, like investing, works best when it is rational rather than emotional. The person who cuts every joy out of life in order to save money makes the same mistake as the spendthrift. They simply chose different forms of foolishness. The spendthrift dies broke. The miser dies alone. Neither of them lived well. Berkshire, an oasis of sanity in a desert of bureaucracy. Berkshire Hathaway is a strange place, and I say that with pride. We have no layers of bureaucracy. We have no committees voting on nonsense. We have no memos circling endlessly so that slow people can look busy. We simply think, act, and get results. Warren and I built Berkshire to be consciously different. Different from Wall Street, different from corporate America, different from the circus of short-term thinking that kills most good ideas before they even leave the cradle. We were not trying to be rebels. We were just trying to be sane. And in a world addicted to complexity, sanity looks radical. People constantly ask, what is Berkshire's secret? There is no secret. We simply avoid stupidity longer than most people can remain disciplined. We do not chase quarterly numbers. We do not gather boards of directors to discuss irrelevant details. We do not issue press releases to brag about decisions that should have been obvious. Our philosophy is boring, and that is exactly why it works. Most corporations function like medieval courts. Everyone wants to look important. They speak in professional jargon, hide behind committees, and avoid responsibility. So nothing gets done. At Berkshire, there is no room for that. We have no strategic synergy committee or innovation department. If you want something done, you pick up the phone, call Warren, and use your brain. No PowerPoint presentations, no fashionable buzzwords, no consultants charging $500,000 to tell you what common sense knows for free. If you walk into Berkshire's headquarters in Omaha, you will notice something strange. There is almost no one there. No empire of executives, no marble lobby, no 20-story glass monument to ego. It is mostly Warren and a few assistants, and somehow this tiny group manages hundreds of billions of dollars in capital. Why? Because competence scales better than committees. Warren and I never wanted to be like everyone else. We saw what everyone else looked like: over-leveraged, overconfident, and irrational. We decided to go in the opposite direction. No debts we do not understand. No forecasts we cannot explain. No strategies dependent on luck. Reputation as compound interest. Reputation is an asset that does not appear on the balance sheet, but it is precisely what determines whether you survive the next storm. Most people do not understand that. At Berkshire, we treat reputation like oxygen. You do not think about it every second, but if it disappears, you die instantly. Warren and I spent decades building that invisible asset. It did not arise from branding or public relations. It arose from the simplest and hardest thing in business: doing exactly what you said you would do every single time. That is our secret, and it is shocking how rare that is. A few years ago, Warren got a call on a Friday. By Sunday, he had committed $10 billion. No lawyers, no committees, no endless approvals. And everyone involved knew the deal was firm. That kind of speed is not recklessness. It is preparation. It is decades of rational decision-making distilled into a single moment of trust. When the world is falling apart, people call Berkshire not because we are cheap, but because they know we will pick up the phone and do what we promised without drama. In business, reputation works like compound interest. One good decision reinforces another. And before long, people quite reasonably assume that you will not behave like an ass. That assumption is worth more than any marketing campaign. Warren once said, "It takes 20 years to build a reputation and 5 minutes to ruin it." He was being generous. Some people manage to ruin it in 5 seconds, and most do it for ego. They want to look tough, aggressive, or innovative, so they cut corners or exaggerate numbers. They trade long-term trust for short-term applause. That is a bad deal. I have never met anyone smart enough to make that trade twice and win. The anatomy of fear and the management of chaos. When a crisis comes, you see two kinds of people: the over-leveraged and the under-disciplined. Some borrowed too much. Others believed too much. Both end up in the same place, ruined and bewildered. Meanwhile, the boring fellow who kept his powder dry walks in, buys their assets for pennies, and looks like a genius. He's not a genius. He is simply not an idiot. I remember a young analyst who asked me, "How do you stay calm during a crash?" I answered, "You do not stay calm. You plan while you are calm, so that you do not have to improvise when you are terrified. That is the whole trick. You win by thinking clearly when it still seems unnecessary. Because when clarity finally becomes a matter of life and death, for most people it is already too late." History guarantees crises. 1929, 1973, 2008. The script never changes. Only the actors do. Overvaluation, leverage, foolishness, collapse. Repeat. Berkshire's secret weapon is not luck. It is liquidity and self-control. The average investor hates cash because it yields nothing. He forgets that cash yields the most important thing of all: survival. It is what allows you to play offense while others are busy sorting through their own wreckage. In 1973, I watched investors sell magnificent companies for half their value simply because they were afraid. Fear compresses IQ faster than alcohol. The irony is that it is exactly in these moments of collective stupidity that the greatest fortunes are made by those who do not participate in the hysteria, the crypto casino, and the religion of Judas. And since we are talking about collective stupidity, let us touch on a subject that irritates me especially. Recently, I was invited to a Bitcoin happy hour. Imagine that. A group of people celebrating volatility. I declined. I already know how it ends, just like every other speculative mania in human history. The only thing new about Bitcoin is the marketing. The foolishness is ancient. I am not against innovation. I am against illusion. Innovation creates value. Illusion creates volatility. Most of what is sold as financial innovation is just a complicated way of separating fools from their money. I once joked that the crowd of Bitcoin enthusiasts reminds me of a religion-worshipping Judas Iscariot. They glorify the betrayal of reason, mathematics, and common sense. They preach decentralization, but their real god is greed. They do not want a better financial system. They want a faster casino. And Wall Street, of course, was delighted to build it for them, complete with influencers and tickets to the Tulip Festival. In 1952, during my honeymoon, I stopped in Las Vegas. Back then, the casinos were full of elegant men in tuxedos. They all looked intelligent until they opened their wallets. They had traveled thousands of miles to do something mathematically stupid. That is Bitcoin in a nutshell. Well-dressed people doing foolish things with a confident expression. Investing is buying productive assets that generate cash flow. Speculation is buying hope and calling it technology. If you do not know the difference, the market will teach you, and the tuition will be expensive. When someone tells me, "Charlie, you just do not understand blockchain," I answer, I also do not understand astrology, and it seems to work about as effectively. If an asset requires a constant inflow of new believers in order to survive, congratulations. You have found a cult, not a company. Bitcoin is rat poison squared. It is stupidity armed with marketing. A shiny object designed to make you forget that value must be earned, not mined. Rational joy and the conclusion. After 9 decades on this planet, I have learned something that ought to be obvious, but somehow is not. The goal is not to be rich. The goal is to remain rational long enough to live well. Wealth without reason is delayed misery, and reason without joy is a life not worth living. People often think I lived a life of sacrifice, denying myself pleasures for the sake of compounding. They are mistaken. I did not sacrifice. I optimized. I enjoyed life within reason. I let compound interest do the heavy lifting so that I would not have to live in constant anxiety. A rational life is not joylessness. It is building a life in which joy does not bankrupt you. Some people live as if they will never die. Others live as if they will die tomorrow. Both are fools. Wisdom lives in the middle, where prudence finances freedom, and freedom does not destroy prudence. When you think rationally for long enough, you stop asking, "How do I get more?" You start asking, "What do I actually need?" And the answers become more modest. You stop buying things to impress people who are not thinking about you. You stop confusing comfort with happiness. You realize that peace is the highest yield investment of all. Warren and I never aimed to build a monument. We simply wanted independence, the ability to live and think on our own terms. That was our definition of wealth. freedom from nonsense. And if you look at Berkshire today, that is exactly what it is. A monument to independence. We have seen everything. Booms, crashes, bubbles. Every few years, someone promises a new way to get rich quickly. And every time, arithmetic quietly kills the fantasy. If you want to win, do not try to outsmart everyone. Just outlast their stupidity. I call that rational joy. It is the happiness that comes from not being an idiot for long stretches of time. You will never see that phrase on a motivational poster. It does not sell books, but it works. So if there is one lesson in all of this, saving, spending, crises, and Bitcoin clowns, it is this. Be rational long enough to earn a peaceful life. Not a flashy life, not a perfect life. A peaceful life. Because in the end, peace of mind is exactly what money was supposed to buy you from the very beginning. And if you have reached that point, congratulations. You have won the only game that truly matters.